The Federal Reserve now has new leadership, and many people want to know what is the plan. Like, what are they going to do? Are they going to cut interest rates? Are they going to raise interest rates? Are they going to print money like crazy? Like, how are they going to handle this inflation crisis? So the situation is that the previous chair of the Federal Reserve term has now ended, and as you probably know, the current administration did not get along well with the former leadership. They openly called the past chair an idiot, a dummy, an imbecile, and this was in public. I mean, this was in front of reporters, on numerous occasions. Okay, so I just want you to know that the reason why the administration was acting like this towards the previous chair, especially in front of the media, was because they did not want to cut interest rates as quickly as the administration wanted them to be cut. So they wanted to lower interest rates so that it would give a boost to the economy, to the labor markets. And of course, it would have been nice leading up to the election cycles. But the Fed did not want to cut interest rates because that would have accelerated the rate of inflation. And what ended up happening is that there were threats to get rid of the leadership. Multiple approaches, numerous occasions, but it all ended up being a bluff because they made it to the end of their term. Of course, so a new leader has been selected to be the new head of the Federal Reserve. This individual has close connections with the current administration. They are worth an estimated $200 million. It is my expectation that they are going to be worth over $1 billion after this amazing opportunity to serve the public as a new chair of the Federal Reserve. Okay, now here's the problem. I want to point this out. The administration has brought in this new leadership to do two things. The first thing is to print trillions of dollars, and the second thing is to lower interest rates. Now, can this new leadership deliver on pleasing the administration? Because, that is the only reason why they got the job over much more qualified candidates. But I just want to pose this question to you. How can a Fed chair cut interest rates right now when the rate of inflation is soaring? So here is the rate of inflation. Ever since the start of the massive global shifts, the Federal Reserve has been trying to get the rate of inflation down to 2.0% for the past few years. So, I have drawn a red line to illustrate where 2.0% is at, so this is why the previous leadership got ridiculed, because they said that this high-level inflation is just transitory, like 6 years transitory. So when you take a look at the chart in February, the rate of inflation was at 2.4%, in March it rose to 3.3%. And in April to 3.8%. Now, I just want you to keep in mind that these are government-reported figures, so it is most likely wildly understated. But as you can see, they have been jumping up pretty noticeably. Now, I just want to say that I do not know about you, but it is my belief that global instability, which is creating an energy disruption and spiking inflation, I believe that it is not going to end in the next few days. Therefore, the price of energy is going to continue to increase, and that is going to make the inflation situation worse. That is just my belief. And in this environment of higher inflation, can we really cut interest rates at this time? Like, this is the worst time to even ask for an interest rate cut. Okay, with that being said, I think it is important to put yourself in the perspective or like the shoes of the new Fed chair, because on one hand, if you are the new chair, the people that got you the job, the administration, they are demanding an interest rate cut. So what do you do in the situation? Because, realistically, you should not be cutting interest rates. So do you not cut interest rates and then you are going to piss off the people who got you the job and then they are most likely going to go after you with probes, with threats, and then you are going to risk your opportunity to lose billions of dollars, or are you going to listen to them? You are going to cut interest rates for them when you really should not be, so that you can make your billions of dollars and help your friends and family and screw over the average people. Like, those are your options. But let us see what the new leadership decides to do. Now, with that being said, I want to show you what the market expectation is. This is coming from the standard FedWatch tool. The next Federal Reserve meeting is coming up soon. The market expectation is that there is a 98.9% chance that the Federal Reserve will not change the interest rate at that meeting. In other words, they are going to just maintain it where it is, no cut or no raise. And there is a 1.1% chance that the Federal Reserve will raise interest rates by 0.25%. And a 0% chance that the Federal Reserve will lower interest rates. So although the administration wants rate cuts, the market does not believe that they are going to get them in the near term. So it is going to be very interesting, in my opinion, to see what the reaction is going to be. Okay, now you have to see this. The meeting after that is going to be in about a month. There is a 92.6% chance that the interest rate's going to remain unchanged by that meeting, and there is a 7.4% chance that the Federal Reserve will raise interest rates by 0.25% by that meeting. So I would say, 7.4%, that is a meaningful probability. Like, that is not nothing. and a 0% chance that the Federal Reserve cuts rates by the next meeting. So as a matter of fact, I want to take you all the way to the end of the year. I want to show you the December 2026 meeting. The market is expecting that there is not going to be a single rate cut this year in 2026 entire year. So listen, I think that the administration may have the patience to hold their tongue for at least one meeting. I am talking about the upcoming meeting. You know, if there is no rate cut. But if the new leadership does not cut interest rates at all this year for the entirety of 2026, I expect a bunch of tantrums coming out of the administration. Like I am just being realistic. Okay, now, do you want to hear something really funny? You know what money printing is, right? It is when they create money out of thin air. It causes inflation. But what do the people in power care if they are the ones that control the money printers, right? So the new Fed leadership is saying that they are going to do the opposites of money printing. They are saying that they are not going to print money. Rather, they are going to have the Federal Reserve start shrinking their balance sheets, which is the opposite of money printing. And to that, I say, yeah, right? So that is like saying that the government is going to balance their budget. That is like saying politicians are going to go to prison for insider trading or corruption. Like it is a fantasy, it is a fiction. In my professional opinion, I believe that they are lying. Like I do not know how the Federal Reserve is going to shrink their balance sheet and do the opposite of money printing when interest rates on government debts is just skyrocketing to uncomfortable levels. The 30-year yield right now is at 5.13% as of the latest reading. You have the 10-year yield at 4.6%. Like, this is not good. The bond market is in trouble, and I just want to say good luck to them trying to shrink the Federal Reserve balance sheets in this type of environment. So you have to understand that if the Federal Reserve starts shrinking the balance sheets, then they are going to what they are saying is that they are going to be dumping treasuries into the open markets or letting them run off. And that is going to raise interest rates even higher on treasuries. And that is going to cause interest rates to go up on mortgages, on student loans, on credit cards, on auto loans, on business loans, and the government. Of course, they are going to have to pay much more in interest expense, in their budgets. So, shrinking the balance sheets. Yes, of course. It is going to cause economic damage. It is going to raise interest rates, and of course, that is going to really upset the administration. So, I just do not see realistically how this new leadership is going to do the opposite of money printing, how they are going to shrink the balance sheet. And right now, at this moment, the Federal Reserve is already printing billions of dollars a month, and that does not appear enough to stop the cracks from getting bigger. Now, I just want to address this because it appears that it is scaring a lot of people. So when you look out for the rest of the year, the expectation is no more interest rate cuts in 2026, and the real possibility of 1 or 2 rate hikes. But here's the thing. How can they raise interest rates when the economy is already suffering? People are expecting the Federal Reserve to raise interest rates to bring down inflation, right? Like that would be the purpose of raising interest rates. Okay, first of all, people believing that raising interest rates by that tiny little amount from 3.75% to 4.0%. Like, is that really going to suppress inflation? Like, really seriously? Like, last time the Federal Reserve leadership wanted to bring down inflation by raising interest rates. They raised the interest rate to 20%, not from 3.75% to 4.0% or to 4.25% to 20%, so they can raise it to 4.0%. Like, it is not going to bring down inflation. And we already covered in a separate video why we cannot raise it to 20% or even 15% or even 10%. It is just not possible. I am talking about mathematically. Listen, all I can tell you is that the Federal Reserve is trapped. All roads are just going to lead to money printing. It is inevitable. There is no other way. Anyways, I am going to be here to help you navigate through all these crazy times. As younger investors, the biggest takeaway from this whole political theater is that you cannot build a long-term wealth strategy on the assumption that central banks will save the day with lower rates. The game has changed, and relying on cheap debt to pump up speculative assets is a dangerous play right now. Discipline and liquidity are your true shields in this macro environment. If the bond market is struggling and the Fed is backed into a corner, you need to focus on building strong cash reserves, focusing on assets with real tangible cash flow, and ignoring the short-term noise coming from the headline fights between politicians and policymakers. Do not chase paper yields that look too good to be true. Stay grounded. Rely on fundamental metrics, and protect your capital. We will keep tracking these regulatory movements every week to see how this transition plays out. Keep your eyes open, stay disciplined out there, and I wish you a very nice day. Take care. The complexity of these economic systems can feel overwhelming, But remember that your personal financial health is not determined by the next central bank statement. It is determined by your personal actions, your savings rate, your ability to adapt, and your refusal to be manipulated by short-term market noise. Every time the system faces a crisis, the default response from leadership is more of the same. Printing money, delaying the inevitable, and hoping that the next generation pays for the mistakes of today. But you are in the driver's seat of your own financial future. Do not outsource your critical thinking to the people who caused these problems in the first place. Instead, build your own internal database of knowledge, study the history of credit cycles, understand the difference between real value and inflationary bubbles, and focus on assets that hold up when currencies devalue. If you feel like you are working hard but falling behind, you are not alone. The system is designed to keep you in that exact state of confusion. They want you to feel that everything is too complex for you to understand, but it is not. It is a series of simple incentives, self-preservation, power, and the constant expansion of debt. When you strip away the polished press conferences and the staged photos, you see a machine that is struggling to keep itself alive. Do not be the fuel for that machine. Keep your excess cash in places where it cannot be wiped out by poor policy. Continue to stack your skills so that your value remains high regardless of what happens to the dollar. And remember that true wealth is not just about having more money in your bank account. It is about having the freedom to move, the freedom to choose, and the resilience to survive whatever comes next. It is a long road, and you will have to make sacrifices that your peers might not understand. You might have to live below your means. You might have to say no to social trends that are designed to keep you broke. But those choices are the building blocks of your eventual independence. There is no magic switch that will fix the economy, and there is no politician that will come down and save you from the consequences of your own spending habits. The only real solution is radical ownership of your own situation. We are living through a period of immense change, and those who are prepared will be the ones who thrive when the smoke clears. So keep doing the work, keep watching the real data, and keep building that foundation of wealth that can withstand any storm I have seen. Cycles like this before, and the pattern is always the same. It starts with denial, moves to panic, and ends with a desperate attempt to print their way out. But printing is not a solution. It is a delay, a tax on your future self, and a theft from your hard-earned savings. You are smarter than the average participant in this system. You know that the math does not add up. And because you know you can take action, every dollar you save, every debt you pay off, and every piece of knowledge you acquire is a step toward total control. Thank you for joining me for this breakdown. I am committed to providing you with the most honest view of the economic landscape because I know you deserve better than the mainstream narratives. We will stay ahead of these developments together, and we will continue to look at the cold, hard facts that no one else wants to talk about. Until next time, stay sharp, stay ready, and keep fighting for your future. It is the only one you have, and it is worth every bit of the effort. See you in the next one. Take care. Every single day you have a choice. You choose how to spend your time, you choose how to spend your capital, and you choose how to interpret the reality around you. The temptation to follow the crowd is massive, but the crowd is almost always wrong in the long run. They are following the headlines, the sound bites, and the false sense of security that is pumped out by the media. You are choosing to look behind the curtain, and that is the first step towards true independence. Do not let the constant barrage of bad news stop you from moving forward. Use it as fuel to become even more focused. The opportunities for those with capital are going to be massive in the coming years. But you need to be ready to strike when the time is right. Do not blow your reserves on things that lose value. Invest in your own capacity, your own health, your own knowledge, and your own network. The financial systems of the world are going to shift underneath us, and having a flexible, resilient strategy is going to be your greatest advantage. It is not about predicting the future with perfect accuracy. It is about being prepared for a range of outcomes. That is why we analyze the data, that is why we track the bond yields, and that is why we talk about the reality of these policy decisions. You are doing the work that most people are too scared or too lazy to do, and that gives you a massive advantage. Do not take that for granted. Take ownership, take responsibility, and take control.